Hello traders, Gary Wagner here just before 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 20th day of March 2019, and this is the daily report for gold and silver. And what a day we have witnessed in the precious metals markets with the FOMC meeting concluded and the statement revealing an extremely more dovish Fed than anyone had thought possible. One of the main points that they brought up was the fact that in terms of their dot plot, there would be no rate hikes this year and only one next year. That was astounding. The other thing that was mentioned was how they were going to liquidate their asset sheet and, most importantly, stop the sales of their assets by September of this year. Let's take a look at what that did to pricing. First, to gold. Gold had an excellent day. It was down before the Federal Reserve meeting concluded. However, it closed up by $6.40, with most active April trading at $13.1290. June followed in suit, gaining $6.20, currently trading at $13.1890. Of course, we are long from $13.05. Silver fared pretty well also, gaining almost 12 cents, $15.48. Platinum on a tear. It really has been producing. $863.90, up $11.30, and palladium continues to gain, continues to move to new record highs, now trading at $1,559.50. This was certainly a day that we will remember for some time. Traders, we were certainly fortunate enough to be positioned properly prior to the statement that was released today following the conclusion of the FOMC meeting. To give you an idea of how fast and quick this market moved, I brought up a gold chart. Each candlestick represents 30 minutes or a half hour in time. And you can see that prior to the release of the statement, we had a steady and methodical decline. Gold was trading just at about 1309 and then traded to these lows. This, of course, is basis most active April at around 1298. So it actually broke below there, but then it slowly started firming up just prior to the release. This long green candle is the result of an extremely bullish statement made by the Fed and unexpected announcements in terms of rate hike plans for this year and next. A total of one rate hike over the next 2 years. It doesn't get any more dovish than that. Obviously, the market did run into some resistance just above 1316, 1317, and sold off just a little bit as we went into the close. Nonetheless, it was an exceptional day for the precious metals markets. Traders, on a technical basis, today's upside move certainly created two very, very interesting facets that we need to focus on. First of all, the market was able to trade and close above the 50-day moving average, this for the first time in the last 4 trading days. The second thing is that our level of resistance that we have been watching has been sitting at around 1312 to 1330. That's a 0.23% retracement. And we certainly traded to that point, but finished just shy of that area. So this is the current level of resistance, and I think that we've got extremely strong support at this point, not only at the 50-day moving average, but 1300. This, of course, bases the most active April contract. Traders, we are looking at the June contract of gold. This, of course, is where we are currently long one contract at roughly 1305. If you recall from yesterday's show, we did move our stops tighter, moving them to 1297.13. Low today came in at 1304.30, so we certainly avoided being stopped out by quite a few dollars, and we can also see that the June contract closed above the 50-day moving average. But much in the same way, we found some resistance that came in roughly at the 0.23% retracement. I do not have a fib retracement up, but this is pretty much where it resides at about 1318. And that's the next level that we absolutely need to see gold pricing overcome, because I believe that once that's accomplished, we should have a clear shot in terms of our next target to be approximately 1340, 1335, and of course that is based upon this top here that came in just at the end of January. Above that is the record high for the year so far. That comes in at approximately 1357, and I still believe that our upside target is absolutely attainable, and that is up at around 1375. Traders, obviously, maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.